Okay, good morning, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or a yes there. Hope everybody's having a fantastic morning so far. Hopefully your trading's going well. I'm looking forward to do some live trading with you guys today and going over the markets. Also, just want to give a shout out and to welcome everybody that's new with us in the program. If you are new, to let us know, what state you're from or what country you're from, and we'll welcome you here. I also want to just give a shout out to everybody watching this in the recording or on YouTube. Feel free to comment in the comment section down below if you're here in the recording. If you're here live, feel free to ask questions in the chat box function. But let's go ahead and get started. As always, I need to go over our disclaimer. You can lose all or more than you're willing to invest or trade in the market. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys. So we saw some huge improvements with our COT report trades from last night. Let's go ahead and update those. At least last time I checked, we had some huge improvements. So let's go ahead and update you guys on that over here. So when we were working together yesterday, we were down a little bit of money. We were down with our trades. Now we are positive, or hopefully everybody should be positive. If you're not positive, collectively across the 6 trades, let's chat. Let's see what's going on there. But let's go ahead and update each one. So when we were in this webinar yesterday, the pound CAD was negative at the time. Now it is positive. So it was minus 43 pips yesterday. I now have 19 plus 19 pips on that. So that's quite the difference from going negative to positive like that. Then I've got, let's see, the next one's the pound yen. I think this is our best trade. Yeah, that one's up 115 pips and it was down -5. So, it's that 115 is pretty good. We'll take it. Let's go look at the pound Aussie next. Pound Aussie. That one was down 18 pips yesterday. Now it's only down 10. So it's still down, but yes, it's down. USD yen, that one was up 17 pips when we checked it yesterday. Now it is up 79. So huge improvement there too. USD CAD, this one was down 15 pips. It is now up 3 pips from yesterday. Okay, last one is the Aussie dollar. This one actually went backwards. It's the only one that I believe went backwards. It was up 3 pips yesterday. Now it is down 9 pips. Okay, so that's where we're at. So we're now so far. And again, it is only Tuesday, so I got to make sure that we're aware of that, right? But we are up 197 pips on the week. None of these have closed or should have closed. So if you have closed out of these trades, let's do have a chat. So yeah, patience pays, right? You definitely having patience really pays with these trades. When I went to bed last night, I checked on these trades and I was pretty sad. I was like, looks like it's going to turn into a losing week with the COT report, but nice turnaround. And it still could be a losing week. It could definitely be a winning week. In fact, I want to talk about what's possible. Today, we're going to look for some additional setups with these. I got alerted over the last couple of hours that we had some significant breakouts with a lot of these pairs. And so we might be able to find some other additional setups because there has been several breakouts recently. But yeah, I think it just goes to show to have patience with the strategy. Last night when I was looking at these trades, I was like, that's kind of annoying. But does that mean just because it's annoying, does that mean we not trade the strategy anymore? Does that mean we give up because it's a bad day? No, right? We have to have the resilience to stay with something when times are tough, right? Especially when we know that the system works long term. So if you have that long term perspective, a day where you're down is not going to really bother you as much. Well, I mean, yeah, it bothers everybody. It still bothers me, right? Like I went to bed last night kind of annoyed by these trades. And that's okay to feel those kinds of feelings. But I think it's just really important to have that long-term perspective. when you're winning and especially when you're losing money, because as you guys know, this thing works long term. I mean, we've had some really good weeks. You go look at the past several weeks, there have been a lot of really good wins. So we just need to stay with that, stay the course. Okay, so let's go look at the charts. I want to see what's lining up here because there's been several breakouts. So like for example, with the pound yen, this is exactly what we were talking about yesterday. Um, we were saying yesterday that if this breaks right here, this resistance zone, then there's going to be an imbalance and an opportunity to maybe grab a couple um, grab a couple of trades um, with this pullback. So if this market pulls back, there might be an opportunity for us to get in on the pound yen. This is one that I like. There's also a few others we can look at. That this is one where there's an opportunity. So why is there an imbalance? So basically, now that the market's chosen to break out, there's a lot of traders who are trapped again. Let's go take a look at the sentiment index. Let's refresh this. Yesterday, I believe, I could be wrong, but actually, I actually wrote this down because I wanted to compare it from yesterday. So yesterday, the sentiment had, this is from last night. Where's the pound yen on here? Pound yen. Maybe I've skipped it. Let's see. I wrote this down because I wanted to compare it. Maybe I'll just do this. Pound. There it is. Okay. So yesterday, 86% of traders were short on the pound yen. I want to see if that's changed. If that's increased, then our signal's really strong. If if the short positions increase, then the signal's really good. If it's decreased, then I'm not sure what would be going on actually. If that's the case, maybe not as strong if that's the case. So let's now that we know that, where is it now? Yeah, so it increased. So that's good. So instead of having 86% of traders short, now 87% of traders are shorting the pound yen. So as the pound yen continues higher, the retail traders continue to short even more. They continue to sell even more pound yen, which is perfect for us because that means the retail traders are piling in to a losing trade and they continue to have that conviction to the losing trade. Now, where is this going? How far can this go? Because obviously everything will come to an end, right? Especially in the markets, right? Things will come to an end. So this is a big, long trend here that's been going on since the beginning of this month, maybe even longer. So all June, the pound yen has just been a juggernaut to the upside. So when is this over? Now, a lot of retail traders, as you know, have speculated that this is the end. This is as far as they go. Now, we did our analysis, right, yesterday, and we know that this is not the end. There's more to this trend. And we drew out our area. This is our supply area up here. How do we know this is supply? You have to do your homework, right? So you have to go out to a higher time frame. Let's try a 4 hour. I can't remember. Was it a daily that we looked at? Yeah, it might have been a daily. Let's go to a daily chart. You have to go to a daily to find this supply, and then you have to go pretty far back, if I remember. Yeah, it's right here. Yeah, you have to go back several years to find this. We found a couple of supply zones right up in here. And we confirmed our price action analysis of these supply zones with these indicators. So the order block detector, right? So in fact, let me delete our supply zone real quick so you can see it. So this is the order block detector from Luxalgo on a daily chart. And they're indicating that there's a massive supply area up here that hasn't been tapped into in the last many years, right? There was this supply zone right now that we're currently tapping into. However, the market's slicing right through it. That's not a good sign if you're a bear. If you're a bull, that's a great sign, which we are, right? So if supply is going to work, and this is the same thing with demand, you want the market to come and touch it and bounce right off of it. Okay, you want it to come Like if the market's coming up to this area, you want it to come up to it and immediately reject off of it and go back down. And for demand, if the market's coming down into a demand, you want it to come down, hit that demand, and then immediately bounce off. Well, that did not happen right here on the pound yen in this daily supply area. What it did is it came up and it just made a home. It just kind of sat inside there, and it's continuing to break to the upside. Okay, when that happens, that means the market doesn't really respect the supply zone, and it's actually looking to continue higher. Okay, so these are kinds of things that I want you guys to recognize when you're trading price action. Is the market respecting a supply zone, or is it just going right through it? Which this one is going right through it. So that means we should continue the trend. Now, that may stop at some point. Now, how do we know when that's likely to stop? Well, it's probably going to stop when it gets close to this and approaches this supply area right here. So I'm going to highlight this area as supply, right? And let's see if there's other indicators that say the same thing. So let's try Sonar Lab. Yep, Sonar Lab has a supply area. It has one right here on the daily, and they have a supply area right here. And I don't think this, let's turn that one off now. And let's try Smart Money Concepts to see if they have a supply area up there. They don't. And it makes sense. I think their data deals with more, I think it was explained to me that their Smart Money Concepts indicator has data that's more recent, so they don't get supply zones and demand zones past a certain historical marker. I can't remember what that is. So it makes sense why I can't see any on there, but I imagine that there probably would be something here if that one worked. That's why I like having these different indicators that I like to turn on and off. I like to turn those on and off to find those supply zones and demand zones. But this is the general area you should be looking at. So if you're doing your homework on the long-term time frame, these are the next areas where maybe it would be okay to sell. It might be okay to sell in these areas, but we're not even there yet. So when these guys are selling the pound yen, the retail traders, right? When we come back over here to the sentiment index, they're way too early. They're so early. They're going to get absolutely wiped out. Look at this, guys. There's 4,000 contracts, at least, that are shown on my FX book, which is not even representative of the entire market. Not even close. So there's 4,000 contracts short on the pound yen, right? These guys are going to get absolutely smacked. Actually, I have my one of my accounts is connected to my FX book. I do it so that, when people want to see my statistics, they can go back and they can see my FX book. So we're actually some of that where it says percentage long. I don't know if you guys have connected your accounts to my FX book, but I have. And so some of that long that you see there is from us. That's pretty cool, actually. But we're not, hopefully none of us here should be part of that short that's on here. I don't think anybody would be short on this right now, at least in our group, right? We haven't said to buy the pound yen at all, or we haven't said to sell the pound yen at all. So except I might be interested in selling it if we could get up to that purple area, one of these purple areas. So as you can tell, we're not even there yet. We're not there. Okay, there's definitely more room to grow on this pair. And how much room is that? So let's measure this, right? If you go from here, in fact, let me jump back down. We don't need to be on the daily chart anymore. Let's go back to the hourly. We don't need to be here anymore. Okay. How much room is this? So from the current price to just the very beginnings of that order block is about 321 pips. So that's what I'm saying is we have at least that. There's even a potential for more if this market wants to go through that order block just a little bit. But I would be pretty interested in closing our trade for profit if we could get to about there. In fact, I'd be a little bit nervous about staying in this trade if it got to there. So I would, for me, since we're already up over 100 pips, if this went up 325 pips, would be up over 400, maybe even close to 500 pips of profit by the time it gets to there. So for me, that's a good day. We'll definitely take a 400 to 500 pip win on this, and then we'll come back next week and see what else we're gonna buy. But yeah, this looks pretty good. So as far as how far does this trade have to go? Yeah, another 300 pips or so. And like I was saying yesterday, these retail traders, the 87%, if you were to line up 100 people, 13 of them would be buyers and 87% of them would be sellers. And those 87% are all in drawdown right now. Think about it. They all have to be in drawdown, every single one of them, because the market hasn't been higher than this. This is the highest it's been. So that means every single one of them's in a drawdown right now. Not one is in profit. Okay. And anybody who's bought has now been profitable because there's never, again, same point, there's never been a price higher than this. So everybody who's bought into this is now profitable, at least for now. So how far, again, we know how far this can go. During this same period of time, those 87% of traders, a lot of them are going to get margin called straight up. They're just going to get margin called. They're going to hate the market, quit trading forever because of just what's about to happen here. And I'm not trying to say that it will happen. From my analysis, it's more likely, let's put it this way, it's more likely that the market's going to go the 325 pips that I'm talking about here pretty soon, this week, maybe next week, but it should get there, than it is to pull back 300 pips like they're hoping. It's much more likely that we'll go that extra 300 pips up than down. Okay. So I just want to make that clear. As we trade this, I think a lot of retail traders might look at this because this is a pattern. This is actually a, I don't know if you guys are familiar with this. This is actually a retail pattern. This is called an ascending wedge. Usually these break to the downside at some point. However, in my experience, because I've traded these and I used to be, and I don't trade them anymore because I got burned on these so many times. I've actually noticed these break out to the upside and then they'll break to the downside. So they might be right about it breaking down, but it'll have to break up first. And that's what we're after, is that move to the upside that should pay us out first and them last if they can withstand that move that's coming and that has started. Okay, actually, let me put that back. Okay, so what are we doing now? What I would like to do is try to find an additional setup on this pair, or maybe some of these other pairs. In fact, this one, what I'd be interested in, let's actually turn on that order block indicator again. Yeah, so it's stuff like this. If we can find an order block down here that we can buy into, that would be a good idea. So I might be interested in that. And then I want to see some of these other ones that have broken out since last night to see if we can get into those. Yeah, Darwin at one point was down 10% from the trades yesterday. Yeah, that's a lot, Darwin. We should definitely, I mean, I'm sure you're now positive quite a bit from these trades, but we should definitely talk about your lot sizing, if that's the case, just because we don't want to ever see a 10% drawdown even on our worst week, right? So we gotta make sure that lot size is about where it needs to be. So if you're not already, I would recommend that you use a position size calculator. This is the one that we like to use. There's plenty of others out there that you can use, but definitely use one. This is how I don't do that. So for example, I took these trades on my 200K account, right? And if I'm trading the pound CAD, I can't remember what the stop loss is. Let's say it's 100 pips. and I'm going to risk 0.75% per trade. This will tell me exactly what I need to risk in order to make sure that this trade is successful. The reason why is because most prop firms will kick you out of the trades if you lose more than a 5% in a day. So if all these trades go bad, that's why I risk 0.75% per trade, because 0.75 basically, well, if you do 0.75 multiplied by 6 trades, that's 4.5%. 4.5%, right? And you're still fine as far as a prop firm goes if all of those trades were to lose. It would stink terribly, but you're still okay. So that's why I've done 0.75. I may change that in the future, but for now, that's what I'm going to continue to do. And I'm not saying I recommend it. I'm just saying that's what I do, and you're more than welcome to do what you want to do. Okay. Some people do 0.50, so a 0.5%. That's even more conservative. I think that's a great idea. I think if you're passing a challenge, it's not necessarily terrible to do 1%. Just know that if every trade lost in one day, you would fail the challenge if you did 1%. If you did 1.5% and you had a bad week, yeah, you could fail the challenge at 1.5. If you had a good week, you definitely pass it in 1 week. I don't know if you guys remember. Well, of course you guys remember. 2 weeks ago, we had a really great week. So I had a couple of traders doing 1% on those trades, and they passed, a lot of them passed their challenges, or at least different phases of their challenges, just doing 1%. In fact, I even had people pass with just 0.75. So you can definitely make tons of money at these conservative numbers. But what I'm concerned about is just traders going out there and risking, 2% per trade, or risking 3% per trade, right? On a winning week, that's great. But if it's a losing week, that can really be terrifying, right? So we want to make sure that we manage that risk correctly. And that's why I recommend that you use this. And if you don't know how to use this, please reach out to me, because I want to make sure everyone is successful at using a calculator, because it's really the path forward, right? So that's awesome. Yeah. Oh, nice. So Roger does 0.75% on cot trades and 0.5% on swing trades. That's a great plan. And Lee says, I passed the first phase of my 200K challenge, risking 0.5%. Yeah. So there's plenty of money to be made, even at those conservative numbers, right? You can definitely do quite well. So yeah, and I'm sure, Darwin, you're quite positive by now, but let's just make sure that we're doing that going forward so that we don't get yourself into trouble if you start a challenge with one of these companies. We want to make sure that you pass that challenge, right? Okay, so cool. Let's go look at the dollar yen and a few others that broke out last night. Let's see, where is it? Right here. This one broke out. Not as crazy, but it did break out. I think I like the pound yen more, so I'm gonna probably just skip this one. We don't need to dive into that too deep. Let's do the pound CAD. Okay, so this one's breaking out. This is good actually with the pound CAD. Okay, I actually like this. So you got a nice old structure right here on an hourly, and we broke that right here. So where can we find liquidity to get in on a secondary trade? So the other reason why this is structure, guys, is because this was a trend line right here. That also broke structure as well right here. So you got 2 breaks of structure going on right there. Let's see where we can find liquidity. Let's pull up that order block detector. Okay, there's liquidity just below that. Let's try a 15-minute chart. Let's see if there's something. Yeah, so this is what I was thinking, is that maybe there's something right in here. There's something right here. Let's try a 30-minute. Okay, it likes whatever's right there. It likes that. And this thing likes this whole area right there. Okay, let's try the smart money concepts. I want to see if that one's got something. Yeah, it likes whatever's right there. Whatever's there, it likes that. Let's try a 30-minute. Yeah. Wow. Okay. So that's where the liquidity is. It's right there. Let's try a 15-minute. Wow, there's another one. Yeah, I can see it right there. Okay, so that's where liquidity is. All right. So let's try Sonar Lab real quick. Okay, actually, no, that's that Sonar Lab. Okay, so only supply on the 15. Let's try a 30-minute. Okay, so the 30-minute does have something right there. Let's try a 45. Yep, that's exactly what we're doing, Darwin. So we're looking for confluence. Your definition's perfect, or your question's perfect. We're looking for confluence in order blocks in the same area with multiple time frames. Yes, that's how I find liquidity, but that's after I did what I just showed you guys. So what I do is I try to find structure breaks first, find structure, then the break. After I find structure, then I'm looking for the confluence with the order blocks. That's how I find these, those picture perfect trades. That's how I do it. Yep. So, and I go to multiple time frames because sometimes you can just hit a order block on one time frame and it's faulty. But if you get an order block that's consistent across, 4 or 5 time frames, then there's a really good chance that that's actually liquidity, not just some fluky, uh, order block that just showed up out of nowhere, right? So anyway, so what I found with you guys is 2 areas. So there's a little bit of something right here that might be worth looking at, but this is where the real liquidity is trapped right there. So anybody who sold right there is seriously in trouble. So we could wait for an entry or pullback into this area, and then you'd get your huge move to the upside afterwards. That seems like a ways to go. So I may or may not come back to this one, but it still might be worth having a trade. So what the trade would look like is something like this, where you'd enter right here, you'd stop out just below this liquidity, and then you'd ride this up to the next supply zone. So that's what the trade would look like, something like this. But I'm going to try to find some other opportunities. But this is a good setup nonetheless. Okay. Pound Aussie broke out a little bit last night. It still hasn't broken out of this area, so I'm not quite interested in that one. I feel like the pound yen and pound CAD look a little bit better than this one. Even though we're in this one, we'll just continue to stay in it, but no need to do anything different. Here's the pound, here's the USD CAD. This is kind of annoying because I've been watching and preparing for this move for a while, and it's now starting to come together. Um, so yeah, with the USD CAD, we've been long on this ever since last week even, and then we finally got the official COT report signal over the weekend. And this is where you're going to find some really you're going to start to see some liquidity grabs here. We're actually starting to see it. So as we look at this, there's a trend line right here. This market broke the trend right here, broke the trend line right there. And that's actually what initially got us into this trade on Friday. And then it didn't quite work out the way we wanted it to. But so far, it's doing a pretty good job at respecting the trend line on the other side. So it's using it as a support level now. So you can see how it was a resistance area. It was a form of resistance in the downtrend. And now that the trend is broke, it's actually become a level of support in this new uptrend that's formed, right? So we're forming an uptrend as we speak. The other thing that we also had recently, and this is very similar to the pound CAD, is we had a nice break of this structure right here. Actually, this goes all the way back to here even. So you can see that this was structure, this was structure right here. And the market just barely punctured through that. So there could be some open liquidity below here. Let's see if that's true. So that's where we want to pull up these indicators and see if there's something. So they on the 45-minute here, I'm not sure why I'm on the 45, but let's go to an hourly. Okay, nothing on the hourly. Let's try a 30-minute. 30-minute does have something right here that we can look at. Let's try a 15-minute. Okay, 15-minute has something here as well. And it also has something right here. And let's try a 5-minute. Yeah, there's some scattered order blocks throughout here. I don't know if it's worth mentioning those ones actually. Okay. And let's go back here. Let's try the smart money indicator and see if there's something here. Yeah, so there's a little bit of something there. And it appears that there's something here. Let's try a 30-minute. 30-minute has one right through here. 45, yep, right through here. Let's try an hourly. Yep, right through there. So that's where the liquidity is. It's in that bright purple area. There's some scattered liquidity that might be worth looking at in here, but this is where it all is. So if you wanted to take the right trade, it'd probably look like this. So you'd enter right there and then you'd drive that to the next liquidity zone. So you'd wait for the market to come in, dip into there, and then you'd go to the next. The problem is I don't know if the market will dip far enough to get to that. It could, so it might still be worth taking. But yeah, we're in a similar spot to where we were Friday. So we're starting to break structures to the upside, just like we were on Friday. And the market is showing that it's transitioning into a uptrend from a downtrend. And we know this not only because the price action's telling us that, but also the COT report is indicating that the banks are using every time, and this is where I feel bad that we kind of got caught as liquidity over the weekend on this trade, because the thing is, anytime this market dips, they're just buying those dips up. So I'm just trying to mimic that same type of activity. So since we know the banks are buying these dips to the downside, how do we get in on these dips as well? So if this market dips, where's the best place for us to get in? And it appears that right here would be the best area, right here. Question is, can we get it there? And it's the same question I'm having with the pound CAD. Can we get it to that point? Let's look at what other trades do we have going on that we didn't look at? I think that's kind of I think that's most of them. We looked at the pound yen, pound CAD, and pound Aussie. Dollar. Oh, we didn't look at the Aussie dollar, but I don't think that one's breaking out right now. No, it hasn't really broken out yet. It actually just came up and attacked some supply, and now it's back down again. So we'll see if that one plays out. But I don't know if there's an actual entry we should get into, because the banks are selling this pair too. And I know that they're going to look to break this support area. But we're already in it. So I'm not really interested in adding to that one, because I don't see a great opportunity for us to find liquidity. Where I see opportunity is on the pound yen, pound CAD, and USD CAD. So I'm just trying to find which one do I feel more comfortable with. With this one, did we go over that analysis? I don't know if we did. Let's try. Okay, so on the hourly, there's a little bit of a demand block right here. Let's draw that out. Let's see. Do we have any other demands? Let's go to a higher time frame. Any other demands? Oh yeah, look at that. So much demand right there. That's on a 2-hour, by the way. Look at that on the pound yen 2-hour. So much demand right there. Wow. I don't know why these guys are selling this. Like, it's just, do your homework. This thing just wants to keep going up, right? Let's go to that 45-minute. Yeah, so they're saying that right in here is where the demand is, right? Let's try a 30-minute. Yeah, so we've got this area right there. It likes that, and it also likes this area right there. Let's try a 15-minute. right here. Okay, 15 minutes says there's something right there. And it looks like we've got something right there. And actually a little bit right in there too. Okay, let's try a 5. Yeah, it's kind of scattered throughout there. Okay, so let's go. Let's try the smart money. Okay, smart money. Wow, it's got indicators all throughout here. So, or order blocks. So it's got one there. Basically all throughout here. So I'm just going to highlight that. And let's try a 30. Yeah, it's all throughout here. Almost this one's just lighting up the charts. That's how significant it is. Then there's one right here. Wow, this is just really getting messy. Yeah, but I'm actually not going to highlight that. Okay. Yeah, so it appears that this area right here and this area right here seems to be the most purple. So now that I remove this and we just look at what we drew out, this area right here is where the most purple is. So ideally, that's the area we want. So I'm probably going to ignore this one, and I'm going to ignore this guy, and I'm going to ignore this guy because they're kind of not as significant. I'm probably also going to ignore this whole area. I'm going to bring this up because it appears that most of this liquidity is just tied up in here. So this purple area seems to be the real liquidity. Okay, so that's where you want to buy dips on the pound yen. If you can get it, that's the problem. Can you get it? That's the price you want to get. Because if you can get this, here's what the reality is. If we can get this trade and buy right there, your stop would go about right there. Your target on this, guys, can go all the way to that next supply zone on the daily chart that we figured out, which gives you a 1 to 4. Actually, it's better. It's 1 to 4.3. So yeah, if you can get, actually, you can tighten this up just a little bit more, and that'll get you almost 1 to 5, 1 to 4.5. Yeah, we'll go with that. 1 to 4.5 if you can get that. That's huge. That's absolutely amazing. And I think it's worth setting up now that we've done our homework. I think it's worth having that. But again, I just have no idea if you're going to get it. Darwin says, does order block measure buy and sell limits or stops? Yeah, so every order block indicator is a little different. I know a little bit about each one. I've done some research into each one because I use it a lot in the classes and for my own trading. So with Sonar Lab, that's the first one I used. I started using that one probably about 8 months to a year ago. And theirs is just based off of, it's not based off of any orders like you're talking about. It's not based off of any trapped orders. It's based off of, I looked into how they programmed it, and it's just simply based off of a candlestick formation. So basically, if you have, it's if you get if you have a big move to the upside, it'll take the last major candle before that move to the upside, and that's how Sonar Lab does it. So it's a very simple, and I would say it's the weakest form of order block because it's not based off of actual orders. It's based off of the assumption that there's probably orders there, if that makes sense. So it's the most inferior order block indicator that I have, but it's still been pretty good. It's a nice confirming order block indicator. And then you've got order block detector from Luxalgo. That's my favorite one, even more than the smart money one. I've heard, and I don't know this for sure, that it's based off of a data set that they are privy to. I don't know what that is, but they actually base it off of the actual orders. That's what I hear, but that's all I know. And it's the same thing with their smart money concepts indicator. I think that one has more to do with volume and not so much orders. But both of them are pretty similar to each other. And my theory on this is if you can get 2 of the 3 or all 3 order block indicators suggesting that there's an order block in a certain area, then that is probably an order block. But if you just get one indicator that shows an order block on a single time frame or just 2 time frames, that may not actually be an order block. So that's why I try to find that confluence. So as you and I just did that analysis together, look how the market just lit up in this area. So we know that there's liquidity in this area that could be used to create a fantastic trade. So I think I'll still take this trade. In fact, you know what I'm thinking of doing? Let's instead of taking one trade, let's take 2 trades. Let's place this trade right here at the pound yen. If it never triggers, it never triggers, but let's still have it, just because if you can win this trade, that's going to make you 4.5% on your account if you risk 1%. So that's a huge trade worth having. Very probable setup if it actually triggers. So let's definitely place that one. And then I'm trying to figure out if we want to place this one as well, or the USD CAD option. This one is really, really good as well. Yeah, this is a good setup. Again, if you can get it to trigger, let's look at that USD CAD. Maybe we go with that one instead. Yeah, let's actually go with this one. That way we're kind of diversified. We have one with the pound pair and we have one with the US dollar pair. I think that's a good way to go. And yeah, I'm going to ignore these other order blocks that are single. These little singletons right here, let's get rid of those. But this area that lit up as an order block area, let's use that. Let's definitely use that. And if this one wins again, that's almost 1 to 5. And we're just basically trying to attack this old resistance right here. That's all we're trying to get to. Okay, so let's place both of those. I think that's a great idea. Okay, so let me get this set up and ready to go, and we'll place both of these. Okay. Yeah, we'll do this one first, maybe. Okay. So far it's turning out to be a good week. I mean, we just be patient with it. I'm not about ready to close my trades. Just because we've had some improvement, right? Same thing with last night. I didn't close my trades last night because I was worried that that the trades would go against me, or that they'd go against me worse. I mean, last night I kind of went to bed. I'll be honest. Last night I kind of went to bed kind of hopeless with the trades. I thought, oh, this is going to be a bad week, because we've had some of those weeks. There have been weeks where, 5 of the 6 lose. There's even been a week or two where all 6 of them just lose. So I do want people to be aware of that, just on the record here, that it is possible for us to just get the COT report straight wrong. And I want you to ask yourself, because I can't answer this question, but ask yourself, if you lost 5 of the 6 trades or 6 of the 6 trades, would that shake you so much that you wouldn't trade the strategy anymore? If it would, then I think your lot size might be too big. Okay. By the way, and I know this might sound kind of weird to a new trader, but some of the best strategies you'll trade have very specific ways to exit. What I mean by that is a strategy like this one, where with the COT report specifically, where we intentionally take losses, that may sound unattractive to a new trader, but I'm telling you, from my 10 years, 11 years of trading, if you can exit out of a position, or have a strategy that has a very clear exit like we do, I can't tell you how valuable that is, because I've seen and come across so many different strategies that don't have a clear exit. Um, I actually used to watch a guy trade. I used to actually work for a guy that he had a trading system where he didn't really have that clear exit. And he would just kind of, he'd make money every day. He actually was pretty good. Um, the problem is that when he got into a pickle, no one knew what to do, not even himself. He didn't know how to get out of the trade if he got himself into it, if the market just went the wrong way. And that was very hard because I was trying to mimic the way that he was trading. And so were the clients, but no one knew exactly how to get out of the trade. And so you'd make money, you'd go like 9 days making money in a row. But on the 10th day, the wrong type of market condition comes along and it wipes you out. And all of a sudden, it does it took all the it took all the gains you made in those previous 9 days. They're gone from one single day. I don't know if you guys have ever experienced that from a trading style that you've ever tried before, but that's the experience of practically all retail traders. Is they'll make money, 9 days in a row, 19 days in a row, and by the 10th or the 20th day, just the wrong type of market condition comes along and everything is gone in one day. So that's why we get out of trades when the market condition's not right. If the thing's not going to work, we will exit the position. 1 second, guys. I'm just double checking my work on this signal that we're posting. Yeah, and it's no offense to the other trader and the other. I mean, his system was working. It's just that there wasn't, and that's the thing. It could have been a great system had it been very clear how to get out of the trade, and it just wasn't clear. Okay, 3.1130. And the other thing I was going to say is a lot of people get attracted to those types of systems because they want to win every day, right? You just want to make money every day without fail. And I totally understand that. There's definitely a component to that, to want to win every single day. I totally know how that feels. But sometimes the best systems are a little bit more boring and they get you out of trades. You'll actually get out of the trade early. Sometimes that's super valuable just to get out of a bad trade. Also, getting out of a bad trade early, what that will do is it will help you preserve more profits that you've made from the good weeks. So I actually like it when I have a losing week, as long as I can keep that losing week small. If I can keep it small, then that means when I have my big winning week, which will inevitably come again, then I get to keep most of that. And I don't have to give a lot of that money back to the market. There's just this mentality out there that just says, I don't want to give any money to the market at all. I just want to trade without giving any money away. And unfortunately, there's just not a way to do that. You have to kind of, it's like the example I often give is it's like if you wanted to open up oh guys, let me change this. This is supposed to be a limit order, buy limit. I'm getting distracted here. There we go. Let me fix that. And maybe you guys can double check my work on those trades I just posted, but okay. So the example I say is if you wanted to start up a burger restaurant in your hometown or wherever you live, you're going to have to go lease out a place, right? You're going to have to pay money for that. You're going to also have to buy equipment. You're going to have to buy a grill. You're going to have to buy the chairs, and you're going to have to get all the legal stuff set up. And that's going to cost a lot of money to get set up, right? So by the time you have your grand opening, oh, by the way, you're going to also have to hire employees and things like that. And you're going to have to pay taxes just to have the privilege of paying your employees. Yeah, it's crazy, right? There's a lot of stuff that you're going to have to do. So by the time you have your first customer come in, you're already in the hole tens of thousands of dollars, right? Just to get your first customer, right? And people do it all the time, right? Because you got to do it. You got to make money, right? You got to move forward. Um, and with trading, we're doing the same thing, but we don't have to you don't have to lose tens of thousands of dollars first to make your first dollar trading. Okay. Which is great. It's awesome that you don't have to do that. One second. I'm just double checking my work here. 182.513, 186.848, 181.548. And this is a buy limit. Yes. Okay. Perfect. So we'll take those two trades. And let me know if I did those incorrectly, guys, and I can fix them while we're still in the webinar. But yeah, so that's what I was saying is, yeah, it's with anything. You want to start a construction company, it's going to cost you a ton of money. You want to open up a clinic, that's going to cost you a lot of money. Yeah, and that's what's so cool about trading is if you have a system where you're willing to work with losses, and which we can just call it losses, expenses of the business, right? So when you study somebody's statistics, they have expenses, right? If I say I have a 50% win rate on my strategy, well, that means I lose the other 50% of my trades, right? And that means, and then when I tell you that I have my average win is a certain amount and my average loss is a certain amount, well, I'm also admitting that I have some losses, right? And that's how you can analyze whether that's a good strategy or not a good strategy, right? So basically, I guess what I'm saying is be willing to work with losses, because I've been around, and we had a class on this yesterday. If you guys missed it, we had a pretty good webinar on risk management and the basic training webinar. Go back and watch it if you didn't. It was pretty good. And we talked about toxic trading styles, risk management styles, and the type of thing that a lot of traders want to trade, but unfortunately doesn't work long term, is things like martingale, right? Where you double down your investment when you lose. Because when you trade those kinds of things, it ensures that you make money pretty much today. You'll make money today if you subscribe to a martingale. But eventually, the wrong type of market condition will come along and it will wipe out your account, right? I've been through that so many times. And that's why I trade systems like this now, where I have very deliberate stop outs. They hurt, but I'm willing to take those little pricks of hurt for the reward that's tied to it. And it helps me sleep well at night, knowing that I have those kinds of things installed and put into place. But I think the new trader comes along and says, I don't like that. That's kind of annoying. I'd much rather just find a way to win all the time. And a lot of times those traders have to go through they have to kind of go through a time of learning and then find their way back to, oh, I see why you have to take losses now. I see why you have deliberate stop losses. Oh, I get it now. I see why you take 1-to-4 risk to reward ratio type of trades. I get it now. Okay, that makes sense, right? And I think you guys are starting to understand that too, especially many of you. A lot of you guys have taken this to heart, and it's just become part of your trading method now, because it works, right? Anyway, that's just my side thought, and I just wanted to bring that up because we had an interesting 24 hours, because we last night went to bed losing. I was down on my 200K account. I was down like $3,500 on my trades. It really was terrible, not fun to deal with. When I woke up this morning, I checked the app, and I thought something had happened. I was like, what's wrong? How am I up $2,000 on these trades, $3,000 or whatever it was on these trades? So that's a $5,000 to $6,000 differential. Because if I was down over 3,000 and now I'm up 2,000 to 3,000, that's $5,000 to $6,000 that the market improved overnight, right? Okay, great question, Stephen. I'm glad you asked this. So Steve says, do we use a trailing stop on these trades? On these types of trades, I wouldn't recommend it. Okay, on the COT report, yes. On these types of trades where you're getting your specific price action entry, no, and here's why. I do not recommend a trailing stop because you already have a tight stop loss to begin with, okay? So if this market comes down like we want it to, trips us into this trade and then goes up, we don't want to get tripped into it and then have that stop loss just trail us behind so closely, right? What I would recommend is, let's say you get up a 1 to 2, we'll say, yeah, like if you get up to about here, maybe bring that stop loss to break even at that point. But I wouldn't trail it the rest of the way. I would not do that. But great question. All right, guys. Well, I'm going to go ahead and wrap up with that. Also, just quick reminder, tomorrow we'll have live trading, and tomorrow's a big lineup. We have live trading. We're going to do our prop firm class tomorrow night before the web COT report. So tomorrow at 11 a.m. Eastern, we have our normal live trading. And then tomorrow night at 8 p.m. Eastern, we're doing prop firm webinar where we teach you about different prop firms. If you have a prop firm you want me to highlight tomorrow, let me know today. I will go study up on it and we'll present it tomorrow. So if you guys have one that you want me to look into and you want me to share the pros and cons behind it, let me know today so I can put that together. So that will be tomorrow at 8 p.m. Eastern. And then at 9 p.m. Eastern, we'll have the normal COT report webinar. So Lux Trading, Mark says, okay, I'll look into them. But if you guys have other requests, let me know. We can look at them as well. So, all right, guys, have a fantastic rest of your day, and we'll see you guys in the next webinar. Thanks for coming.